Now, for this particular conversation, we're going to be shortly now joined by our speakers. The moderator of this trilogue is going to be Mr. Ashutosh Sinha, Senior Editor, The Economic Times, and the speakers being Mr. Anand Daniel, Partner, Accel, and Mr. Sanjay Aggarwal, Co-founder, Moneyview. Let's welcome our dignitaries with a warmer round of applause, ladies and gentlemen. It's all happening today, and I'd urge all of you to contribute with your patience and your immense value. Thank you once again to all our speakers for joining us. Thank you, Mrs. Sinha. Over to you, Mrs. Sinha.
Thank you so much. Thank you, everyone. It looks sparse, but we'll try and make this conversation as interesting as possible. Thank you, Sanjay. Thank you, Anand.
Thank you.
Why is this so important? Just 2 lines, maybe 3 lines. If you've been following the RBI, the broader picture, financial inclusion, and that's not just the RBI, even the IRDAI is talking about it, and the policymakers in North Block, far away in Delhi, they've been wanting to do a whole lot of things, technology being one of them, by which they can reach out to every Indian to be banked. The numbers are looking fairly good compared to what they were maybe 10, 12 years or so. But give us a sense, Anand, if you can begin,
Sure.
on the inclusion journey for Bharat Fintech. We're trying to focus on Bharat for today.
Yeah. Thank you. Thanks for having me. Maybe I'll start. I've been an investor in India since 2010. So if you look at the journey of India in the last 14, 15 years, it's been very exciting. When I moved back from the US after studying and working there. At that time, if you had to lend to someone, if you wanted to lend to and look for a name, Anand, my name, there would have been 1 million+ matches, right? So from then till now, right? So it's impossible to lend based on name or any particular way, leave alone in rural, but anywhere in India. But where India has come, like with the UPI, which has 90% penetration now, and Aadhaar, which has 90% penetration now, and because of that, on top of that, UPI, which is doing 14 billion transactions, 400 million people are on the platform transacting regularly. Why I'm talking about that is one of the core infrastructures that India has built over the last decade, and as the last panel indicated, we are probably the most advanced when it comes to payment as one of the main areas. The second thing that is our asset is our consumer base, right? The overall, out of the overall 1.4 billion, like 750 million people have a smartphone, which makes them accessible wherever they are. And half of them are in rural India, what we call Bharat. So they can be reached digitally, and they can transact using UPI. They also have bank accounts, right? Thanks to the government's push there are 500 million+ bank accounts. So you have all the ingredients, all the basics that are needed for a strong financial inclusion environment where lending is possible to them, investment access is possible to them, insurance is possible to them. Most of it, all this can be done digitally. So it's an exciting time. So the last decade, the infra has been built. If I were to do a comparison, if you looked initially, the Flipkarts of the world had to do their own cash on delivery, build a whole infrastructure, whereas the new generation of e-commerce startups can rely on what is built there. Similarly, and then deliver to rural India, the Bharat. So same thing can be done on the digital side as well. So it's a pretty exciting time for us.
So he's probably talking of a time when he's lived through Aadhaar expanding, 2008 onwards when Aadhaar started. What's been your experience? And again, you come with a little bit of experience in the US as well.
Yes. So thank you for having me here. I'm Sanjay, co-founder of Moneyview. Also, as part of Moneyview, we've been on the edge of the fintech revolution that has been happening. We started a journey about 10 years back, and it's been a fantastic journey. And we're talking about 10 years back to what Anand was saying. This is pre-Aadhaar, online Aadhaar availability, pre-UPI, pre any kind of digital public digital infrastructure really being available to the customers. And I think a lot has happened in the last 10 years, and it's been a fantastic journey. I think the way we look at solving the financial services problem in the country is that first there is the access layer. I mean, how do you make financial services accessible to the customers, right, to the large masses in India? And then we talk about how we can solve the needs of these customers. And I think the access story is where I think most of the work has happened. Most of the fintechs have actually done a fantastic job. The regulators have done a fantastic job. And there is so much digital public infrastructure which is available on which we can ride today and create the right kind of solutions needed for the customers.
So what Anand mentioned, Sanjay, if I were to come to you again, is we're talking not just the traditional banking or lending or something of that sort. We're also looking at insurance, other innovative products, and other products which may not necessarily be only finances, because we've already built the roads for that.
Yeah, so I think so the access layer, while building the access layer, the infrastructure is there to take the financial services to the masses. And I think to begin with, I think India being a credit-starved nation and continues to be, the demand for credit is very, very high. So I think credit is going to be the leading product in most cases. But the need for savings instruments, savings products, wealth management products, insurance products is as much. The difference is that the right kind of product, personalized product, needs to be created. And through this digital infrastructure, it has to be viable to be able to service the customers for these products. So it is about sachetization of financial services products. It's about micro savings. It's about micro insurance products, micro wealth opportunities, right? And I think that's where a lot of work is happening now.
Yeah, Anand. So I'd also like to add you to, if you can give us a comparative picture compared to maybe some other country where some kind of similar activity is happening. If you can paint that picture as well.
Got it. So I think let's start with maybe even credit, right? So if you look at credit to the rural India, it's about $250 billion, growing at 20% year on year for an economy which is the size of like India's 3.7 trillion plus. It's a very small percentage. So I think even though all the roads are laid, the access to credit is still pretty low. And that's a low risk thing for consumers to try out, because they need money. And if there's a way of easily giving them the money, as Sanjay was mentioning, in a sachetized way, and the business also builds that thing. And if you compare to like developed markets and all, the access to credit is very high. Like we'll be in single digit here, whereas there it's like almost anyone who needs the access, as long as there is a reasonable. The other thing here is the CIBIL record, which is now 500 million people, which is very good progress, which is the credit history. And that is a lot more thicker when you look at developed markets. So India is fast catching up. And if we can use credit as the wedge to get more and more people into the system, right? So I think that will be the first wedge. And I think technology plays a very good role here, because you can easily, and Sanjay would be the right person to talk about it, you can easily use technology to profile, to get a lot of data on the customers and build a good history for them, and get the like new to credit or even thin file customers on the platform and start working with them on a regular basis, and then build on that. So hopefully that's it. I think credit is the first one, and then we can go to investment and insurance, and all these are must-do products also. But if I look at the evolution, I would think it's that way, but love to hear.
Sanjay, you'd love to add about probably how can India, we not talk of gold as a product and the innovation brings about?
Yeah. So no, let me just first touch a little bit on the credit side, then I'll come to the savings instruments and different innovations that are happening in that space. I think on the credit side, we've all talked and heard a lot about how good the infrastructure is now in terms of digital public infrastructure and the railroads that have been built to take access to every nook and corner of the country. I think the next problem is to solve for the needs of the customer. And that is where all the innovation that many of the fintechs have been a part of have happened, right? How do you leverage various kinds of data which is available, different data sources that are available, and assess, create customer profiles, their financial profiles, assess the risk of these customers, and create the right kind of product and offer them those products, right? Which are from a serviceability standpoint, they are viable, commercially viable, and as well as from a risk standpoint, they're viable. And I think that's the work that I think a lot of us are doing, and it's just, I think we've just scratched the surface right now, right? And I think these models have to go through many iterations of maturity, right? Now continuing to the other piece, right? I think on the investment sides, again, I talked about the sachetization of the products. How the Bharat that we talk about, people who are earning anywhere between 15,000 rupees to maybe 25, 30, 35,000 rupees a month, they still have a need for savings. They still have a need to keep their money aside and grow that money in various viable ways. As an example, you talked about gold. Digital gold is a fantastic product that has come about in the near, very recent past. And where people are able to deposit or buy gold for as low as 20 rupees, 30 rupees, 50 rupees a piece, right? And I think, and we've seen a reasonably fast growth of this product. But I think this is just an example. I think there are many such examples that will emerge in the times to come.
So fintechs are helping in that, the access they are helping, plus they are also the catalyst of that change that is happening. We spoke of the credit part of it. Of course, we spoke of the other side of it, the lending side and the payment side. What is that scale of change and how do we build to the next level? Anand, as a VC, how would you look at that opportunity? Is that happening enough?
Is the scale of change of this lending plan? I would say there's always scope for growth here because, as I was mentioning, 250 billion is a very small amount of, if you just take only lending, right? Only the credit side is very small. And then, and even if you go there and double click, a lot of that will be loan against property or gold asset-backed lending, as you would call. And rightfully so, because if you're lending, let's just imagine there are 650,000 villages. If you had to, and then let's say 650 district HQs. District HQ, okay, you can lend that and then go and collect and everything, because lending is the easy part, collecting money back. Even if there's intent, there could be inability to pay because of other issues that might happen in the family situation, the business. So I think it's still very early days of even credit and the penetration. Even though the UPI penetration might be high, bank account might be high, I think the models that need to go, MFI did a really good job, right? So I would say about 7 crore households, or 60, 70 million households came under the MFI wing for credit. But that, again, if you look at it, it's very specific to the models that the MFIs followed. So it's still not deep enough to give for the broader masses, because a lot more people need to be reached, and for different use cases. Because you can't say, I'll only give you 10,000, 20,000, 30,000 rupees, and maybe Sanjay can add more. The people's needs could be very different. You'll have to customize for the purpose. Maybe someone's kid is going for education and they need a loan for that. Someone fell sick or business needs. And then it can't always be against property. It's okay. Property is a good way to get people on the platform, but you need more and more unsecured also. For that, you need the credit files and the credit histories and the ability to be able to efficiently collect in all these 650,000 villages, right? Not just in the major centers. And if you look at, we're talking about the post offices, there's 150,000 you were mentioning, but that still doesn't cover. Even if you go to 150, that's a great first start. But how do we get the reach much broader than that? Because majority, 900 million people live in the villages, right? Not in the tier 1, 2, 3 cities that we talk about. So the solutions are thought from the cities down versus the villages up. So I would encourage any entrepreneurs here to think villages up and how do we solve for distribution and scale using technology in a more efficient way, because whenever I talk to banks, they want to reach out. Everyone wants to reach the rural, but how do you do it efficiently? For lending, for credit, for investments, for insurance, we can talk about any of these.
So Sanjay, what needs to be different if you're reaching out as your experience possibly could give us a sense of that. If you're reaching out to those 650 or a little more number of districts that there are in the country and beyond, how does the system, the digitized system, look different?
Okay.
And how does the entrepreneur solve for that in terms of collecting, which is the tough part which Anand was mentioning?
Yeah, so I think, see, if you look at India, there are, about 20,000 PIN codes. The banks have done a fantastic job in serving the top 40, 50, 60, 70 million customers, but there are about 400 million customers on UPI. There is about 1 billion bank accounts now. So I think there are a lot of people who may have access to banking, but they don't have access to financial services products. Now, I think the key to this, which I touched upon earlier, is how do you increase your reach? How do you take this to the masses? And I think when you talk about India, unless you localize, unless you regionalize, it becomes very hard. So I think while the technology exists, but how do you communicate with the customers? So localization or vernacular support is key. The other is, again, when we look at Bharat, we have to also think about other modes of communication with the customer. So I think voice-based services is also going to increase. I think there's a lot of work that is happening with ChatGPT, with AI technologies coming in. A lot of the interfaces could potentially move towards voice-driven interfaces, right? And how you can communicate to the customers is going to be key. And the second part is going to be the sachetization, which I talked about. I think it's very, very important for everybody to understand that the scale of these products is going to be very small. I think the customers in the tier 3, tier 4 and below who are staying there, their earning potentials, let me not say earning potentials, but I think today what they're earning is less. And I think the products have to be customized for their needs. So when we're talking about credit, the credit has to be small, but it has to meet their needs. We're not talking just because you can do a small ticket loan for a short tenor. We're talking about how are you servicing the needs of the customer. The need itself may be 25K, 30K, 50K loans, but the serviceability may be that the customer can only repay in 12 months because their earning is small, right? So I think creating the right set of products from credit standpoint, similarly from investment, right? I mean, today, most mutual fund platforms will allow you to invest in mutual funds, but the minimum ticket size will likely, in good funds, would likely be 1,000 rupees or more. But I think if we have to go to the masses, we have to reduce that hurdle, right? So I think personalization, understanding the needs of the real Bharat, what do they need, what can they service is going to be very, very important in, taking financial services to every part of the country.
So I love to saying these words, small will be the next big.
Small is beautiful.
So as an investor, as an institutional investor, how do you look at that opportunity, pushing the case for newer fintechs with newer thoughts, fresh ideas to join that revolution and build it?
Yeah, I think it's very important to think through from the perspective of the customer here. Like if you're talking about consumers who are earning 30,000 or lower, let's say 15 to 30,000, what is their ability to save? They might be able to save only a few, like in the gold sachetization that he talked about. You could invest 50 rupees, 100 rupees on a per day or a per week. So providing those kind of products, right, in an asset class that people understand, gold is something they understand, is a very localized solution there. I'm just giving you one example. And the other thing is to be able to reach them with maybe in an omni-channel approach. We haven't talked about it because people in the smaller towns and villages need to know, like when you're taking money, it's different, but when you're giving money, it's a different thing, right? So when you're investing or you're like either investments in mutual funds or anything like that, even when I talk to my relatives in smaller towns and villages, they want to talk to someone who is able to explain to them in their local language. It could be done over the phone and maybe over time with AI and local languages also. But at we're not people starved. So the initial easy way is to set up efficient models where one person is able to cover, let's say, 100 villages or whatever. Like you'll have to figure out more scalable ways of taking these sachetized products and reaching people through even omni-channel approach for be it investing, moving people from just gold and FDs to mutual funds and other instruments that we all take for granted, right? And then and the other last part is the insurance side. Because even if one small, if you're earning 30,000 or lesser, someone falls sick a little bit also, or suddenly you have to pay some, like a wedding in the family, any event, they're all set back quite a bit. So are there insurance products for health, less than 15%, less than 25% penetration in rural? For life insurance, less than 15% penetration. There's a lot of scope for taking these penetrations up using an omni-channel approach in both investment as well as insurance. I think these are the approaches we look for, and we're seeing startups start doing this and using technologies for the economies of scale.
So, since we've mentioned UPI several times in our conversation already, the other part of it, the ULI is coming up. There's already, regulators talking about. Give us a sense of what is emerging as an opportunity and how fintechs could be driving that opportunity as well.
Yeah, you want to start? Yeah, I'll start. So I think ULI, the government systematically, like UPI, first Aadhaar and then UPI. Now ULI, what that provides is for more than for the consumer. For UPI, consumers can touch and feel it, right? So you can interface with a UPI payment and all that. Whereas ULI is more aimed at people like Moneyview and fintechs for easy access to, let's say, land records and other things which are not easily available for everyone, right? Milk pouring, that was interesting to know that using the milk pouring records, you'll know how much earning potential is there in that family. So things like that which are not very obvious but available, and if you can get all those records, digitize it and provide it, then startups can build on top of that and create change. And these things take time. Like if you look at Aadhaar, there was a lot of resistance. UPI took some time. All these take time. This is very early, it's just announced. So I'm pretty bullish on the potential for building on top of ULI over the next 5-10 years.
Sanjay. Yeah, so I think ULI, like UPI, I think it's another great initiative which RBI is driving, and the fintech cell of the RBI is driving. I think, from a fintech standpoint, when you're talking about, this is specifically to lending, credit products, to take products to the customers, you actually need the capital. And I think the biggest challenge in growth of fintechs is going to be how do you tap into large pools of capital? Today, we have to, at Moneyview, we have about 20 partners, large NBFCs and a few banks. But I think a platform like ULI can standardize integrations with large sources of capital. So we will be able to leverage a lot more capital. I think suddenly that could become available. So I think that's one thing that I'm excited about from ULI standpoint. I think the other, what Anand talked about is access to different kinds of data sources. And I think that there are some that are listed in there, but I think what we've heard is that there are lots of different kinds of data that we can tap into. I think for credit to have deeper penetration, we need data for underwriting. We need data to be able to build the right models. That will help us provide access to more and more consumers. So I think this platform is very, very welcome, and I think we are excited to participate in that.
Sorry, especially in a market like India where it's very low on credit file. Like if you look at the CIBIL files, you can talk about it. It's still pretty thin, right? Maybe.
Yeah. I think one is the footprint is very small. I think while the numbers may stack up quite a bit, about 300 million to 400 million customers have footprint in CIBIL, but I think a lot of those are single trade lines or secured asset trade lines. So I think that there is not enough thickness which is available. If you roll back the clock, even 7-8 years, I think the bureau numbers were very, very small. Today, the numbers are stacking up, but I think that the richness of the data is not sufficient.
With ULI, then you can...
With ULI, I think you can access a lot of different data sources which can help you underwrite better.
So now that access is kind of pretty much falling in place, how does the clock for inclusion be improved? Ultimately, RBI and the policymaker, the regulator and the policymaker, they want better inclusion, probably the last man standing. They want credit and, of course, payment capabilities to reach there. What lies beyond the access that we provided? Sanjay.
Yeah. So I think, see, access, I think the infra is built, largely built. I think it'll keep evolving. I think there'll be a lot more innovation that will happen. I think it is about solving the needs of the customers and solving the needs with within the commercially viable frameworks, right? I think that's the most important thing. I think today at Moneyview, for example, we have reached to about nearly 100 million customers, which is a fairly large number. And I think there is another 200 to 300 million customers that we can access, which are still outside our reach today. But the serviceability of the 80 million that we have is probably 25%, not beyond that. Because for the remaining 75% of the customers, there is still not enough data. We don't have models for whatever data that we can tap into. And I think that's the change that's going to happen over a period of time. And especially we talked about ULI, as more and more data sources become available, I think the underwriting models will emerge and the models will mature and the access, the reach will go deeper and deeper into the nation.
Anand, your take?
Yeah, so I'm a VC, so I have a slightly different perspective. I think we'll have to first solve for, if you take any solutions, right? If you take, I'll just give you an example of Uber, right? It launched with luxury and then it went to UberX and then Uber Carpool and everything, right? Ola, like all these models. I think if we have to solve for a model, the business model that works for the broader India, like just currently most of the fintechs, I'm not talking about Moneyview broadly, we know problems in the tier 1, 2 cities, we solve for that. But if we can start addressing problems broadly, let's say in the top 500 cities and towns of India, what are the financial inclusion problems, right? So, and just solve for the top 30% there, right? Who have, let's not assume everyone, like there's no like income there, or like if you look at the GDP and if you look at the spread, there's enough people there with expendable income and all that. We've done a study, we've published it also. So if we can come up with good solutions for the top 30% in as many towns as possible, be it in credit or investments or insurance, right? So just taking these three, I think then you can take it down also. So you don't necessarily need to solve for the last man starting in the beginning, because then it might not be a business model that can commercially stand on its own leg. Yes, MFI did solve it for that. That's a different model. If you have a very unique angle in which you can go and address the last person as well. When I say last person, as you referred, the people at the real bottom of the pyramid, right? So that is also great, but you'll have to think of how is it commercially viable rather than just grants or any other way. So my recommendation would be study the top 30%, solve for them, and then take it down. Because if you build the roads there, if you're able to service, like if e-com has solved the problem for delivering for the top 10% of the villages, then obviously the same is available for the whole village, right? So I'm drawing an analogy there as well.
Okay, so we have just a little time. Any questions anyone would like to ask? We can try and take maybe 2 questions. Okay, so we'll just come to you. The mic's just coming. We'll take one more question after this, please. The mic here, ma'am. Here in the center row, right in front of me. Right behind, yeah.
Hi, thank you. I'm Jatinder, and nice conversation. So, our experience has been, fintechs are broadly, they use data, capital, and technology. And as, one of the panelists mentioned that, data and technology is being used and models are developed. Now,
so the question, because
the question, I'm coming, this is a context and important to, understand, because regulation is something which comes up harder, and there are so many regulatory changes over last 12 to 16 months, what we have seen. So businesses start, different models start, and once you get a momentum, once you assume small scale, suddenly there are new regulations, regulatory changes, and that's a kind of a speed block. So as an investor, how do you see the ecosystem which is evolving in the country? And as entrepreneurs, Sanjay, how do you see it? and not just for you, but for entire community. Thank you.
Yeah. Okay. So as an investor, this is something we think about hard, right? So because regulation, as you said, there's a lot of regulation that has come up. There's good and bad and everything. So I'll tell you the good part is if you look at, I'll just compare for this case, China, a country, there was a lot of fintechs, right? And the government came down on the fintechs suddenly. And then a lot of them went out, right, of business. This is a known fact, right? So compared to that, the Indian regulators are very clear that who they stand for and what they want to solve, the end consumer, right? They're putting them front and center and saying, are we doing all the right things for them? So, and for that, they're constantly talking, engaging with the investment and startup community and coming up with new regulation. And obviously this is not easy as we go through these changes, especially as technology evolves. We are moving, India is probably moving at a breakneck speed compared to what generally, how financial services in the industry evolves globally, right? We are the leaders in payment as we talked about. So I think the regulators are doing a good job of trying to balance the two, right? And as a startup, we'll have to keep up with them and communicate with them and keep building with the regulation. Last thing, clearer clarity on regulation is very helpful, both for investors, both private and public. So the regulators are making it clearer and clearer what's okay, what's not.
Yeah, so a few things, right? One is I would like to acknowledge that I think we are very fortunate to have a very forward-thinking and very open regulator, RBI. They give us a lot of space and room to innovate. But of course, we as fintech players, we need to be very aware that we are operating in a regulated space. We are not directly regulated, but we are indirectly regulated. And industry bodies like DLAI, which Jatin, you're a part of, I think they're doing a fantastic job in actually providing some sort of an oversight on the fintech companies that are operating. But I think the fact that we are operating in regulated space, there is a certain responsibility that comes along with it. And as long as we are all aware of it, and we as fintech innovators, we are sort of conscious of what are the bounds that we are crossing and what is the justification for us to cross those bounds and engage with the regulators very, very proactively. I think the right kind of regulatory frameworks can evolve, which will actually be useful and which will help in the growth of the fintech ecosystem overall, rather than creating road bumps in there.
One more question, if there is anyone. Okay, the time's up. Okay, is there someone? Okay, yes ma'am, please.
Hi, I'm Kiran Sharma.
Sure.
I like to touch upon one point, that is, in-person touch is important for trust, since we are in business of trust and discipline. How do you see the next level of aggregation at scale when, the in-person touch is so critical? MFI is one, but, are there any next avenues? While you have seen certain investment companies over there, Anand, I'd like to you.
Anand, we were talking about trust.
Yeah.
So I think trust is very important, especially in financial services. And I think maybe in credit, the relationship does not begin with trust, but over a period of time evolves into trust. But in other financial products, trust has to be the first stage. But I think historically, because the world had more been non-digital, more physical, brick and mortar, I think we are sort of very used to a physical touch point. I think in the commerce world, we have seen this evolve, right? Earlier, it was hard to imagine you shopping for any of your fashion wearables online, but today people are doing it. I think the trust, there are many different avenues of building trust, and I think many of them require the right kind of communication, the right kind of right medium of communication with the customers, and of course the kind of customer service that you provide to these customers. So I think when we talk about a digital ecosystem, I think that the physical touch, in my view, becomes less and less important over a period of time, as long as you're covering it up and providing that trust through other means.
And the only thing I would add is, I have a slightly different view. For the people giving out money, investing and insurance and all, they might need that physical touch for trust, at least in this first wave. So using networks that are already available, right? Whatever that is, like be it like how Airtel has done it, right? Or if you look at the telcos, they've been pretty efficient in going and using their prepaid network and then making a payment bank out of it. And like I think using models like that, using technology to be able to be more efficient. You need not have one person per village, but can you have one person covering 100 villages? I'm just making up something. Like you'll have to think the models. There are people trying various different models. Nothing has really scaled, but we'll have to try a handful of these. And we also talked about AI and other things, doing voice bots and different things. That's probably out there a little. It's not technologically out there, but first is the physical, and then comes the like using more and more of technology.
Okay, thank you so much, gentlemen. Thank you for taking out the time. Thank you for being patient listeners and also for the questions that followed. Just one word or one line that I tend to remember in the context of fintech entrepreneurs. They probably need to think as if tomorrow is today. They'll probably be able to innovate for tomorrow then. Thank you so much. Over to you, ma'am.